Welcome to the latest episode of our podcast series for financial advisors. Today's episode is The Least Boring CPA on how tax planning can add value to clients and your business. It's a conversation with Stephen Jarvis, CEO and head CPA of Retirement Tax Services. I'm Louis Diamond, and this is the Diamond Podcast for Financial Advisors.
At Diamond Consultants, our mission is to help advisors live their best business life. We want every elite advisor to find exactly the right place for their business and their clients to thrive, whether it's at a wirehouse, a regional, boutique, or independent firm. As the industry's leading recruiters and consultants, we've transitioned more than $250 billion in assets under management in the past decade, and each year, 25% of transitioning advisors who manage $1 billion or more are our clients. If you'd like to talk, please feel free to give us a call at 908-879-1002. Are you a financial advisor who's curious about whether you're in the best place to serve clients, or if there might be a better way to optimize your business for the future? Should I Stay or Should I Go is a new book that serves as a self-guided journey, walking you through the key steps that Diamond Consultants takes with our advisor clients, whether considering change or not. Visit diamond-consultants.com/thebook to learn more.
There's no doubt that a certified public accountant can add incredible value to the service that a financial advisor provides to their clients. Beyond the scope of basic accounting practices, a CPA can serve as a powerful partner with advisors and their clients, particularly when it comes to tax planning strategies. Likewise, partnering with the CPA could result in added growth for your business. Stephen Jarvis, who bills himself as the least boring CPA, will explore that potential with us on this episode. The Jarvis name may be familiar. Stephen's brother and business partner, Matthew, who is also a guest on the show, is a popular podcast host, advisor coach, and CFP. So a little backstory on Stephen. He found himself in the first decade of his accounting career, heading to the partner level at a national firm. That's when he realized the work he was doing didn't have nearly the impact he was hoping for, often relegated to a single page inserted into a much larger report. As he put it, there was always going to be a disconnect between my ability to make change and my desire to do so. Today, Stephen found the connection he was looking for. As the founder and CEO of Tax Retirement Services, he works with financial advisors on tax planning through a year-round tax service model that keeps the financial advisor in the driver's seat. What does this really mean? Stephen partners with some of the most successful financial advisors in the industry to develop strategic plans for managing taxes and staying between the lines of compliance. Essentially, he covers all the bases around taxes so advisors can focus on delivering what he calls massive value to their clients. So I asked Stephen to join us on this episode to drill down into what massive value a tax planner can offer to financial advisors and their clients, and ultimately how that can translate into amazing growth and increased enterprise value for your business. Stephen lives up to his title as the least boring CPA. He's an interesting guy who is generous with sharing his knowledge on this podcast and published articles. There's a lot to discuss, so let's dive right in. Stephen, thanks for joining us today.
Louis, I'm so excited to be here. Thanks for having me.
I know you're a podcast pro, run a very successful podcast in your own right. So maybe it'll be a nice change of pace to flip the script and get your perspectives for once.
It is always interesting sitting on the other side of the desk, but I do enjoy it. It's less pressure on me. You're in charge of making sure this is a good conversation. I just have to give my opinion.
All right, we'll see what we can do. So let's jump in. Can you share a bit about your background and what led you to specialize in tax planning for financial advisors in the first place?
Yeah, absolutely. Going way back, decades at this point, I grew up around financial planning. I did back office support in my dad's financial planning practice when I was in college, but ultimately wasn't inspired to go that route as a career path. Instead, I went to college because I thought everyone was supposed to. I took an accounting class because they told me I had to. And then it seemed a lot easier for me than my classmates. And I realized there were a lot of jobs in accounting. And so while not super glamorous, it'll resonate with the other CPAs out there in the world who say, oh yeah, there's becoming a CPA is typically a pretty practical decision. But then when I got into the field, I realized pretty quickly that I was not a stereotypical CPA in that I enjoy talking to people. I enjoy getting on podcasts. I enjoy getting up on stage. I like proactive thinking and not just sitting behind a computer. And so while I did my stint at big national public accounting firms doing the stereotypical CPA thing, I eventually got the entrepreneur bug and decided I wanted to start my own company, specifically working alongside financial advisors, I think in large part because of my background and exposure to that industry. And here I am now 4 years into running this company, and the vast majority of my work is alongside financial advisors.
Amazing. And we'll talk a little bit about the nuts and bolts of your business. But you mentioned had the entrepreneurial bug, grew up around financial planning. But what really inspired you to start your firm? I mean, you could have gone to a more boutique public accounting firm. You could have started a different type of business, could have became an advisor. So what was the inspiration? And I'm curious if the mission and kind of purpose behind what you started has evolved over time.
So a really good question because you're right. There's endless opportunities or endless choices that we could make. After spending time at big national firms, I mean, top 10 accounting firms, I was actually on track to become a partner at a big national firm, which when you start in public accounting, similar to being an attorney, that's what everyone tells you the dream is. Hey, you need to go be a partner at a big national firm. So I was on the precipice of doing that. And then there was a few different things that kind of came together all at once. Some of it was realizing that no matter how far I rose in a big firm, it was always going to be a big firm. There was always going to be a disconnect between my ability to make change and my desire to do so. And then also working at the big firms, and this is true of the smaller boutique CPA firms anymore as well. The emphasis is really working on large projects, on working with businesses, on doing these things that scale really effectively of how the industry already works. And what I was really gravitating towards was finding a way that I could have a bigger impact on individuals, that I could see how the work I was doing was appreciated and valued in a person's individual life, as opposed to adding another document to a 100-page financial statement or a 200-page tax return and wondering if anybody cared about the work I had done.
Yeah, that makes a ton of sense. I mean, I'm sure what you're saying resonates with a lot of our listeners who either have made the leap to independence, they're thinking about it, or they're just feeling probably like you did. Like they get to work with their clients, but they're serving another master. And oftentimes that's the spark or inspiration for folks becoming entrepreneurs in this industry. So, why don't you tell us about your company? What problems are you solving for advisors? And how do you support advisors in their tax planning needs for clients?
So, really, the company was started around this idea of, as financial advisors, how do we find CPAs who will play nice with us? And that might seem overly simplistic. And I have a few business partners that do this alongside of me who are from the financial planning background. And when they came to with that, basically that question that they were trying to answer for themselves of how do we find CPAs who will walk alongside advisors, I thought, you know what, that sounds like a really simple question. There's no way this is an entire company. But as I dove into it and realized how, even though the tax professional world and the financial planning world have so much overlap, so there's just a lot of isolation between the two, the way the industries are run, the way that clients interact with the different professionals. And so at the core of what we're doing is trying to facilitate better interaction between financial advisors and tax professionals, all for the ultimate value add outcome for the end client.
And how do you do that? Is it that you're working alongside a client CPA and a financial advisor, or is your firm the CPA firm doing the tax returns and the like on behalf of an advisor's clients?
Essentially, there's kind of two broad categories we do this in. One is helping the advisors directly to better understand tax planning, to better communicate around tax planning, to be able to better identify opportunities. We help advisors learn how to review tax returns and how to understand the sections of the tax code that are most relevant to their clients. The tax code's 80,000 some pages. An advisor doesn't have to understand all of it, but there's a few things they need to understand. So we have some services that are just targeted for the advisor to go do more on their own. And it's a community, it's a membership program. There's webinars and resource guides and master classes, all those kinds of things that you see that are helping someone who wants to learn more on their own. The other side of it is where we get much more in depth and much more hands on. And so we have at this point about 4 dozen advisors who partner with us so that our team does hands-on tax preparation and tax planning for what becomes shared clients. And so we take all those things that we're teaching and then we do the execution side of it, because all those things that we're teaching and helping advisors on are things that we do in practice all the time. I'm a huge advocate for speaking from a place of reality as opposed to a place of theory. And since I'm not an advisor myself, I don't want to theorize about what might work when you talk to a client or what might sound good or what might resonate. I want to be able to share from firsthand experience, either from the conversations I have with clients myself or the conversations I sit in on with financial advisors, the stories and experiences that advisors share with me. I want this to all come from a place of how does this allow me to take action that benefits my client?
I love it. I mean, it's an element of teach a man to fish, right? So
Mhm.
instead of just, oh, it's a tax problem, pass it off to the CPA, it's empowering advisors to not become CPAs or tax experts themselves, but to be able to be credible, to add value, and then ultimately look to partner with you or the client's CPA or whatever CPA firm they use to do the actual execution of the tax strategy. It's very interesting. And what do you see as some of the most common tax planning mistakes that financial advisors and their clients make, and how do you help them?
The single biggest mistake that I think I see from financial advisors is not recognizing the tax impact they're already having. Because some people will listen to these kinds of conversations and say, oh, well, because of compliance or because it's not my area of focus or whatever their excuse is, they say, I don't do tax planning. But every money decision has a tax impact. And while I think the industry is shifting in the right direction, that shift is happening slowly. And I think it's still the majority of financial advisors who are not being intentional when it comes to taxes. And so we can just start on the side of, like I said, one of those biggest mistakes is making money decisions and not fully understanding the tax impacts, which leads into the next mistake, which is assuming that your throwaway line of, hey, but ask your tax preparer is doing your client any good. If you're not helping facilitate that conversation and that relationship, you just explaining some complicated transaction to a client and then saying, hey, but go check with your CPA when we do follow through and do it, they're not explaining it quite right because they're not an expert in it. And so we see a lot of mistakes happen in that game of telephone. And then in part on the advisor and certainly in part on the client, a mistake again that really fits in with all of this is assuming that tax preparers are all tax planners and that they have all the information they could possibly want to report this stuff correctly. One of the drums that I just continually beat on as I speak to advisors is that tax reporting 1099s and the like do not provide as much information as you think they might. If all the tax preparer is getting at the end of the year is a 1099, there is a huge chance that mistakes in reporting will happen.
So let's try to role play it. Let's take your second mistake that a client comes to an advisor. Let's pretend you're the advisor and
Mhm.
says, hey, looking to sell my vacation home. What should I be thinking about from the tax side? Some advisors who don't work with you might say, you know what, it's a great question, but why don't you talk with Billy, your CPA? If someone was a client of yours or was empowered to understand elements of tax planning, what should the conversation sound like?
The conversation between the advisor and the client.
Let's say between the advisor and the client.
Yeah. So, in an ideal world for me, for the advisors that I work with, I'm helping them understand what they should be identifying to give the client something more specific to take to their CPA. So, that conversation from the advisor should look like, hey, when you go to your CPA at the end of the year, and ideally you're going to them before the end of the year, you're going to need to make sure that you're telling them about when you originally purchased the property, any significant improvements you've made on the property. They're going to ask about how long you've lived there and whether this is a personal residence or a rental. I'm essentially helping that client with a more robust question than, hey, I sold a property. What are the tax implications? And then the other thing that goes along with that for the advisor is, especially if you're managing that entire relationship, we need to immediately tie this into whatever comes next with that money. How is that money getting invested? Is it getting rolled into the next house? Or are there other pieces that are moving here? Because tax planning doesn't happen in a silo. If we're selling a property and the same year we did a big Roth conversion, if we're selling a property in this and it's to facilitate an out of state move, we want to be able to summarize and help our client understand that these are all details that need to go to the CPA, not simply, I sold a house, how much tax do I have to pay?
I think that makes a ton of sense because you're not just rolling over and saying, talk to the CPA. You're adding value by giving the client smart questions or information to share with the CPA. So, not all CPAs, just like not all financial advisors, are created equal. So, if you have someone who just takes the, oh, you sold the house, don't worry, we'll put it on your tax return at face value, they're missing some potentially big tax savings. And then it puts the advisor more in the conversation so that when the proceeds from the sale come through, they're in a better position to do their planning process and help the client make a better financial decision, which ultimately will benefit the advisor.
Well, and the other thing to keep in mind here, Lewis, is that For the client, I mean, how many times in their life have they sold a house? And so it can be easy for the financial advisor and easy for the CPA to assume, oh, well, everybody knows what it means when you sell a house. Of course, they gave me all the information I needed. But for the financial advisor, you probably work with multiple clients a year who sell houses. You're probably working on some kind of house sale every single year. That client maybe hasn't sold a house in 20 years or ever. We can't just assume that any of the information feels natural or that they're going to know what they're talking about. It's the same thing on any tax planning topic. This is something I try to remind myself, even as I'm talking to financial advisors, because a financial advisor might look at 50 or 100 tax returns in a year if they're doing a really good job. I look at probably closer to 1,000 tax returns a year. So I have so much more experience. And I need to remember when I'm talking to other people who have less experience that I'm not taking for granted what they might assume about a particular situation.
Hmm, I like it. And this might be a novice question, but I'm going to ask you anyway. What's really the difference between tax planning and tax preparation?
The simplest way I think about this is driving a car. Tax preparation is the rear view mirror. That's what already happened. Tax planning is everything else. And so tax preparation has to happen because the IRS expects us to. Tax planning is where we can find tax savings, where we can find opportunities, where we can prevent surprises. And usually those are not pleasant surprises, but where we can lay out a path for what comes next.
What are some examples of really smart tax planning strategies that someone listening can take with them and attempt to integrate into their practice?
The single most important thing you can do from a tax planning perspective is to understand what the next 5 to 10 years of your life look like. Because whether it's on podcasts or on the internet, on social media, the headlines get grabbed by things that sound flashy and exciting, like, hey, move to Puerto Rico and only pay 4% income tax. That is a very real thing that only applies to a very small percentage of people. So when we think about tax planning, I try to steer people away from let's look at the flashy things to let's look at the things we can do consistently. And before we jump onto all of the flashy things, do we understand where our highest earning years are going to be compared to our lower earning years so that we can make proactive choices about when we recognize income, where those choices are available to us? Because again, for the vast majority of taxpayers, this isn't about some shiny strategy that needs a private letter ruling from the IRS. It's about consistently doing the simple things over time. It's about understanding, should I be making pre-tax or after-tax contributions to my retirement accounts? Should I be doing Roth conversions? Should I be doing capital gains harvesting? Does it make sense to be intentional about when I take income compared to where I'm living if I plan on retiring in a different state? So if we can go down this checklist of what might feel like relatively simple things, but have an intentional strategy for them, well, we can start making a big difference on our lifetime tax bill, or really more importantly, the tax bill of the lifetime of our wealth, because eventually someone else is going to end up with what's left over.
Yep, that's brilliant. I would imagine that just about every advisor addresses some element of tax in their practice, even if it's just at the end of the year doing tax loss harvesting. But even those advisors who are doing the bare minimum on the tax side, most probably are coordinating with an outside CPA or have at least COI relationships they can refer to. So, if that in mind, how can a firm use tax as a value add to clients to set themselves apart from the competition? It almost feels like everyone says they do tax planning, like everyone says they do financial planning these days. So, how can someone use tax planning as a real differentiator to set themselves apart from the competition?
Well, Lewis, I think you're spot on that if you look around the industry, it's tough to find a firm that doesn't claim tax planning. Even just over the last 4 years that I've been focused on this industry, I've definitely seen that trend uptick where somebody along the way said, hey, this works from a marketing standpoint. So let's just stick tax on everything we do. But I think there's still a huge gap on what people are doing in practice. And for a lot of advisors, tax planning does just mean, hey, our software automatically does tax loss harvesting each year. And so we're going to call that tax planning. For advisors, particularly who are starting out with tax planning or who don't feel like they have a robust approach to it yet, I would still start simple. The things that the client is going to recognize as value are the things that are causing them the most pain right now. So a really great starting point, especially for high earning mid-career professionals or for people who are recently retired or who have a variety of retirement streams that are high earning. I mean, this should, in broad strokes, describe a lot of the clients that financial advisors work with. There tends to be a lot of angst and surprise at tax time when it comes to what my tax bill is going to be. even if they work with a really great CPA, most of the CPA industry has this model of let's do as many returns as we can between February and April. And so there's not a lot of time left over for even the simple proactive things. So I work with an advisor who they focus on working with high earning sales executives. And so one of the first things they do with all of those sales executives is they look at their pay stubs and help them adjust their withholdings so that they don't get surprised at tax time. So for anybody savvy listening, that doesn't actually change their total tax bill. It just sets a clear expectation. Clients love it. I hear endlessly from clients about how appreciative they are about somebody adjusting their withholdings. Taking a step beyond that, most people have never had someone sit down and go through their tax return with them to help them understand how their personal tax return works. And so, again, as a great starting point, as you're bringing on a new client in one of those early meetings, get a printed copy of their tax return and walk through with them to help them understand where their different sources of income are coming through on the tax return so they feel connected to what's going on, so that when you talk about tax planning in the future, you can refer back to that foundation that you've created. You've provided that base level of education so the client understands what it is you're doing. And then, Lewis, if I could wave a magic wand and make everybody in the industry do one thing, I would make every financial advisor get all of their client tax returns every single year, and at a minimum, review those returns to make sure they understand where their planning came through, where the investment income, where the retirement plan contributions, the Roth conversions, whatever it might be, understand and make sure those came through correctly. And then just have some kind of checklist where you're going through to identify potential new opportunities. And this can really be as simple as letting the client know you've done it. And if there's actions to take, here's how we're going to take those actions. Or saying, you know what, great news, Mr. or Mrs. Client. We went through our checklist. There's no actions we need to take this year on taxes, and we're going to revisit this again next year.
Yeah. So, I mean, it's almost like it's hard to encapsulate some of the value add services you just said on a website or on a marketing brochure or in an elevator pitch. But if every advisor's goal is to have the best possible client experience, to be referable, to keep adding value to justify their fee, you just gave 3 or 4 really good examples that don't take that much time, where a client would feel like, yeah, this advisor gets it. Like they're taking more time than my last guy. This isn't something I get if I'm a self-directed client at Schwab. So it's just about demonstrating the value. And look, no one likes paying taxes. I'm sure even you agree. So if there is a savings, my guess is that client will think of you as a hero. They'll refer you more often. And likely you have a client for life because you went out of your way to find something that's legitimately going to put money in their pocket. And it's something that's easier to understand and more tangible than, hey, we were up 1% compared to the S&P this year, down 3% last year. It's something they can take away with them. So I think it's brilliant.
Well, there's definitely a lot of intentionality that went into it. If I can throw in here just a real quick, I don't know if even word of caution is the way to describe it, maybe just an observation. There's becoming more and more tools available to help advisors with tax planning. And I'm a huge fan of software-driven tools. There are some great ones out there that can really help advisors be more efficient to identify tax planning opportunities. Some of those tools even help with some of the deliverables. But the observation I would make is that what I haven't seen yet is a tool that does a great job differentiating between tax savings and tax deferrals. And so I would be really cautious as an advisor that as you dive into tax planning, that you are really clear with what it is that or where the value is coming from what you're doing. To give an example of this, came up recently where someone sent me a tax plan they had received for their own personal situation that came from one of these tools that showed them that they could, over the next 10 years, they could save $350,000 in taxes after planning fees by creating a cash balance plan. And for business owners, cash balance plans can be a great tax deferral tool, which ultimately can lead to tax savings in the long run. But the way this tool described it, it was strict. It was calling everything tax savings, and it was leaving out the piece that, hey, when you go to use this money, you're going to have to pay taxes on this. While taxes can be a great marketing tool, that we don't get lost in the fancy words and create a situation where we're creating a ticking time bomb for ourselves in the future, where a client's going to be really angry because for the last 10 years, you've talked to them about tax savings and all of a sudden the taxes are coming due.
I think that's pretty smart. I would never have thought of that. I guess that's why I'm not an advisor. So, how can advisors integrate tax planning into their practice without stepping on CPAs' toes? Because so many advisors get great referrals from CPAs. They're probably one of their more important centers of influence. So, I can imagine Some advisors might be worried about doing too much, either because it's not their job or because they don't want to push off or disintermediate a trusted CPA. So, what's a way that advisors can still add value to the client, but not make the CPA mad and stop the referral train or create some bad will with them?
A couple of thoughts come to mind. The first is making sure the advisor understands what the CPA is already doing around tax planning, which in most cases is probably not going to be a lot. That's a great conversation to have just to build a relationship, to just say, help me understand what you do for your clients outside of the tax filing season, because we want to make sure that we're never stepping on CPA's toes. And that's going to prompt a great conversation. The next piece is that as you get involved in tax planning, timing is one of the biggest things that will impact what that experience with the CPA actually looks like. If you proactively let a client's tax preparer know, hey, we're considering this strategy, we know there's a tax impact, we'd love for you to weigh in, and you're having that communication during the summer, during the fall, outside of the tax filing season and before the year has ended, now the CPA sees you as a peer. They see you as someone who's coming to them for their professional opinion, because what happens more often than not for CPAs is that in February or March, after the year is already over, they find out about something that's already done and over with. And even if they had a different opinion, they haven't been given a chance to express it or be involved in the process. And so then they don't feel like a peer. They feel like they just have to clean up your messes. And so even just shifting the timing of those communications can dramatically change how that conversation goes and what the outcome is for the clients. And then, Lewis, the last thing I would say, I think with any professional, the best way to develop a great relationship where people are excited to hear from you is if they can see clear ways that you make their life easier. And my favorite way for financial advisors to do this is what we call a 1099 letter or a year-end tax summary letter. If you're tracking throughout the year the work that you're doing with a client, whether it's just on the financial planning side or it is tax planning specific, and then you summarize that at the end of the year for a client to say, hey, Mr. or Mrs. Client, because of the work we did together this year, you're going to receive these 3 1099s from Schwab or these 2 1099s for Fidelity or whoever it is that you work with. And you give that information to the client so they can then give it to their tax preparer. If you have just saved the CPA headache and frustration and uncertainty, and oh, by the way, helped your client along the way, you're going to be that CPA's new favorite financial advisor.
I think that's right. I'm thinking about different folks that I refer my advisor clients to, whether it's a lawyer or a tech consulting firm or a marketing firm. I will be more likely to refer someone if I feel like they understand what the value is I'm playing and if they're going to make my life and my client's life easier. And you're making the CPA have more confidence that if they return the favor and refer a client to you, that you understand the value and benefits of what the CPA is doing. And if you can make their life easier, that seems like a great trade-off.
It's also going to make those CPAs much more likely to refer people to your point, because they see the value proposition. And we got to keep in mind that from the consumer standpoint, not that all accountants and CPAs only do taxes, but that's the public perception. And the public perception is overwhelmingly positive towards tax professionals. And so for you to make a referral to a CPA, it's not a huge leap for the client to say, oh, well, I'm going to go to a CPA, I'm going to get a tax return done. I know what the outcome is. But it's not the same in reverse, because financial planning is not well defined. Financial advisor is not well defined. This whole industry is a little bit loose on what the definitions or what the terminology really means. And so it's a much bigger obstacle to overcome for the CPA mentally to say, wait a second, I am supposed to refer my client who gets a tax return from me every year to a financial advisor who does what for my client? And there's going to be that ambiguity unless you've given tangible evidence of the things you do for clients. Maybe it's not everything you do, but if a CPA knows, oh, well, I know Lewis makes my life easier every year because he's paying attention to the tax impacts of what he's doing. Now it's that much easier for me to say, hey, Mr. or Mrs. Client, if you're looking for help on investments, Lewis has been a really great person to work with these last few years.
That's right. I think we covered some of this, but are there any underutilized tax strategies that you see high net worth clients and their advisors considering or that they should be considering with more frequency?
That's a good question. Tax planning is definitely very situational. And so there's things that are going to only be applicable to business owners. There's going to be things that are only going to be applicable to people who've invested in real estate. And so if we're using a really broad stroke on a podcast like this, I think the thing that gets missed the most often is just the consistency and discipline. For most taxpayers, the biggest tax planning benefits, the biggest tax savings come over time, over years or decades, not all at once. And so it's this desire, as I think it's just as humans, to always rush on to the next shiny thing where we say, okay, we did a Roth analysis 2 years ago, so that's fine. We don't need to touch that again. Well, no, that the tax rules change, your situation changes, your income level changes. We've got to come back and constantly revisit these simple things over time if we want to really come out ahead. So whether that's tax loss harvesting or pre-tax versus after tax, whether that's capital gains harvesting, whatever that might be, we've got to have a system for constantly coming back to these.
Thank you for sharing that perspective. What about advice for advisors looking to build stronger relationships with CPAs, either just as a value add service to their clients or to cultivate the cross referral opportunities?
The single best advice I can give, which I've heard success stories from countless advisors at this point. I originally learned this from my brother, Matthew Jarvis, who's a financial advisor. But to set yourself apart from every other financial advisor who is offering to buy lunch from a CPA or to take them golfing, the single most impactful phrase you can use is, can I pay for an hour of your time? I grew up as a CPA. I'm still a CPA. I've been to so many Chamber of Commerce meetings and different networking events where all of the financial advisors, all the financial services people all look the same to me. They all seem to have the same pitch. None of them really stood out because they all had rehearsed their 30-second elevator pitch that just sounded like gobbledygook. And I couldn't discern any meaningful words in there other than that they had a thesaurus. But if someone comes to me and says, hey, Stephen, because what they're really saying is, Stephen, I value your opinion. I see you as a trusted professional. I'd like to respect that by offering to pay for an hour of your time instead of just capitalizing on your lunch hour. And I've seen this be effective time and time again to get the conversation started. Now, the trick from there is that you have to then nurture this relationship. And nurturing a relationship does not mean constantly asking for referrals. In fact, a lot of times it means never asking for referrals. It means finding ways to show another professional how you take care of your clients and how you are different than everyone else in your industry. So that could look like those year-end tax letters that I talked about. That could look like genuinely asking a tax professional for their opinion on the latest tax law change or a mistake that you regularly see with your clients. Reaching out to a tax professional and saying, hey, we do a lot of backdoor Roth contributions with our clients, but we know that creates some problems at tax time. What have you seen as best practices for someone like me to make a CPA's life easier? And now this feels like the CPA is even just going to help themselves by giving you great advice back on this. And you've shown that you want to collaborate with them, not just dictate to them.
I absolutely love that. I think if anyone listening takes one nugget of wisdom from this episode, it's exactly what you just said, Stephen. It's such a different way to respect the CPA's time, to show that you value them, to ask them for help, which people love to do. And I would agree with you that would set any advisor apart from the competition because I'm pitched frequently by various people that want me to refer them folks. And you're right, everyone just asks for referrals and how can I help or wants to set a 30-minute demo to show me what they're doing. But no one really takes the time to understand me. And I think if they did, I'd think of them differently from everyone else trying to catch my referral flows.
Well, it's so easy to find people's contact information anymore that, yeah, Lewis, just like you, everyone's getting bombarded by these requests that we all know what free lunch means. Free lunch means, hey, I'm really hoping I can find a way to generate business from you, but I want to offer you lunch up front so that we can have this song and dance. And so if you're genuinely approaching a new relationship as I want to find ways for us both to win, I would take it a step further to say, I would look for relationships where your clients are going to win, whether you get a referral or not at any point in the future. And so if you go in with that curiosity mindset of what can I learn from this professional, you need to make sure you use that hour respectfully and productively. That isn't just the newest trick to sit down with them for an hour and hope they like you. It's you sit down with your list of questions, and it can be some of those things we've already talked about of, hey, I'm tired of my clients getting IRS letters because they didn't report the basis correctly on their RSU vest. What have you seen be effective in making sure that gets on the tax return correctly? You're paying for the hour. Use it effectively to learn things that are going to benefit your clients.
Love it. Are there any red flags that advisors should watch out for when working with a client's existing tax professional? So client comes to advisor with XYZ scenario. What's something you've seen as a red flag that maybe you can suggest a different CPA or you need to get your hands dirty to help put out a fire?
Nothing comes to mind that's specific to CPAs. I think this is just working with professionals in general. I mean, you're looking for people who are willing to be a team player. That's actually a great way to help a client identify if they're working with good professionals or it's time to find somebody new. Hey, from the advisor side, telling the client, I'm willing to work with any professionals that are already in your network as long as they're a team player. Because that sets the client up to expect that you are, in fact, a team player. And that if someone else isn't going to be responsive, if they're going to be combative, if they're not going to be helpful, then it's their problem because they're not a team player. So I think I look for things more broadly of, are they responsive? How do they handle it when something goes wrong? Because none of us are perfect. And so if something goes wrong, are they approaching it from a standpoint of curiosity, of trying to solve this for the client, or do they get really defensive and it's just all about protecting their opinion of themselves? I'm definitely on the lookout for people who are overly aggressive. Again, this applies beyond just CPAs, but specific to the tax world. If I'm working with people who seem to be taking an approach of, well, the IRS won't notice, like that's not what I want to be involved in. As much as I want to help people save on taxes, I want them to pay every dollar of tax they owe. I just want to proactively work to make sure they don't leave the IRS a tip.
Hmm. Well said. So we've been talking a lot about the value of tax planning to a client, but let's be a little bit selfish for advisors. What role do you think tax planning plays in the overall value of an advisor's practice?
Over the last couple of years, in particular, last several months, I've been spending a lot more time talking to people who are in the process of selling their practice, who are in the process of making transitions. And there are a lot of conversations around the real math around valuations. And the thing that stands out to me from those conversations is that the acquirers in particular are looking for organic growth and they're looking for recurring revenue. And tax planning is great for both of those because tax laws change every year. People have to file a tax return every year. That keeps bringing people back. It's a great marketing tool. The tax professional world seems to be a little bit on the decline as far as the supply and demand balance goes. And so we're seeing more and more consumers who are just going directly to their advisor and saying, hey, I need help with taxes. And so for the advisors who lean into that, they're going to see more referrals, they're going to see more prospects, they're going to see that organic growth. Because it turns out these acquirers are really savvy. And so if your firm has only grown because the market has grown, they can strip that out and they're going to know that you don't have organic growth. And so, yeah, it does wonders for the valuation of a financial advisor's practice. And then, Lewis, the other thing I'll say from a selfish standpoint that advisors should be thinking about is that as we go through this conversation about tax planning you should be doing with your clients, you should also be doing tax planning for yourself, particularly if you are a business owner as a financial advisor or you get compensated as a 1099 contractor. If you have self-employment income of any kind, there are a lot of tax planning opportunities that we see advisors miss all the time because they're focused on their clients. Recently, I was talking to an advisor running a mastermind with dozens of advisors looking through tax returns and identifying 6 figures in tax savings for the financial advisors themselves. So don't forget to make sure you apply this stuff to your own situation.
Yes, the doctors make the worst patients. I've definitely seen
Mhm.
that. And I like the way that you tied back the benefit of tax planning to thinking about what it is acquirers value the most. So if you know they care about organic growth, and that's like one of the biggest things they care about, then thinking of tax planning, even if you have to hire someone or it's going to take you more time, looking at it more as an investment because it's going to help you with retention, it's going to help you stand out, it's going to help you get more referrals is, I think, a really cool way to look at the benefits of tax planning for a practice.
Absolutely.
How about this? Actually, let me ask you a question that's I hear this often, and I don't know which side of the debate I fall on. So we've seen, especially with RIAs, that more and more firms are adding tax preparation in-house. They're acquiring a CPA firm, they're hiring one, they're a CPA themselves, et cetera, because they want to either have another revenue stream or they think it makes the business stickier or it's just a really good value add to clients, which I agree with all of those. But there's some folks who say, if I start doing tax preparation, even though I know it would be a value add for my clients, then I'm going to shut off the referral stream from CPAs and it's not worth it. Do you have an opinion on whether you think it's effective and good business for advisors to consider adding tax prep to their practice? Or are you more a fan of outsourcing it and doing some of these strategies and working hand in hand with the CPA?
Lewis, there's a couple of things in there. I'll try to speak to all of them. But the thing that stands out, maybe this is because I like to be slightly combative at times, is mention people being concerned about shutting off the current referral stream from existing CPAs. Anytime somebody brings that up, my first question is always, oh, great. How many referrals did you get last year? And depending on how they answer that question will affect where the conversation goes from there, because there are absolutely advisors who get great referrals from CPAs. I'm not saying that's not a thing. But what I've found in talking to advisors is that when you start asking for real data, the answers start changing. And so I'll see advisors get hung up on, oh, well, I don't want to shut off these CPA referrals. And then they go back and look and they're like, oh, I've gotten 2 referrals in the last 3 years. Like I've told myself that this was this great relationship, but it doesn't actually prove out in reality. The other thing I'll say is that even for the advisors who are getting CPA referrals, I would go and look, and probably you can even ask the question, maybe not super directly, but find out if that CPA is actually taking on new clients. It's very possible that CPA who's sending you referrals is going to be ecstatic to hear that someone else is going to take care of for them what might be less complex tax returns so that they can focus on other things. There just aren't a ton of CPAs out there desperate for more work. There's such a need for more CPAs that they're not actually scared of you taking all their work from you.
It's a very interesting way to look at it. And maybe it can even just be a conversation about, hey, like I promise you, anyone that you've referred me or refer me in the future, I wouldn't consider taking them on as a tax client. So just making it clear to them that you're not the competition. You're a way to help them alleviate some of their workload. And if anything, you just understand the tax world better and that you'll still look to refer them work for more complex things or for niche strategies, et cetera.
Well, and the other side we got to look at here is where is the CPA world headed? Because the AICPA, which is the governing body for CPAs, has for years now had a financial planning designation. I go to the AICPA's big conference every year, which is a fantastic conference, and they have whole tracks that are focused on helping CPAs step into the financial planning world. So not only would I not be concerned about jeopardizing your referral streams unless that's where every one of your clients come from, what I would be paying attention to is if you don't find a way to be collaborative and proactive on the tax side, or you actually putting your firm at a disadvantage because at some point those CPAs who are currently doing high volume, low margin work on tax prep, are they going to look around and say, you know what? I think I'm a pretty sharp person too. So why don't I just step in and do this high margin stuff the financial
Mm,
advisor is doing?
interesting. Interesting. So CPA, friend or foe, coming soon to theaters near you. So how about just a couple more quick questions? And this is more just the kind of a grab bag of random ones, but how can advisors simplify complex tax concepts for clients without overwhelming them? I mean, when I hear tax and tax code and I just like want to fall asleep. So if an advisor wants to help clients and add value, you want the client to be bought in and you want them to understand it as well. So are there any strategies you'd recommend for helping advisors simplify the complex and boring tax concepts for clients?
Well, we'll skip over whether or not it's offensive to call them boring, but the broadest recommendation I can give you is you have to practice. Everybody wants like, okay, what's the magic analogy? But there's lots of good analogies out there. What's more important is how you deliver them. I like to think about this as you should be able to explain this in crayon. Not that you need to literally draw in crayon, but you should practice this on your own tax return. You should practice this on your teammates who aren't financial advisors. If you can't explain it to the person at the front desk, you probably don't have a good shot of explaining it to your clients. Take a shot at explaining it to your kids if you've got teenage kids. The more opportunities you have to practice and say these things out loud, the better you will get at delivering it in an effective way.
And I like the idea too of like, can you translate this concept into crayons or into like
Mhm.
a super easy to digest and probably interesting either analogy or story and make it resonate with the client? So otherwise, you're just talking head.
Well, and you need to, when I say practice, I mean get on Loom and record yourself. Do this with an actual live person because I think many of us are guilty of like thinking through these concepts in our head. And then in our internal dialogue, we're like, oh, yeah, I've got that covered. It'll be just fine. But it's different when then you have to explain it out loud, when you have to hear yourself talk, when you have to see somebody's body language. What happens when halfway through your explanation, the other person looks confused? Does that derail you? And so you literally have to practice these things over and over if you want to be good at them.
And also for the client to be empowered to make the decision. If someone doesn't understand something, they're probably not going to have the same level of buy-in to take the advice that you're giving.
Yeah, 100%.
So I know you run the RTS Tax Planning Summit. You have a very prolific podcast. You do a lot of work with your brother, Matthew Jarvis, from the Perfect RIA. Can you talk a little bit about your extracurricular activities and what's the goal of these events and what typically can advisors expect to take from them?
Definitely appreciate you bringing that up. We've had a lot of success with the other events that we're doing. At the end of the day, it's all still back to this goal of transforming the way that advisors approach tax planning. And so I love doing my podcast. I love being able to come on podcasts like this. I'm personally a huge fan, and this might just be preference. I love doing things in person. I think there's things you learn from getting in a room with other really smart people that you won't in a virtual environment. And so part of the success of that event is certainly the people we put on stage and the expertise we bring from the microphone, but it's also filling a room with 300 advisors who are committed to leveling up and improving and letting them share with each other. And so when this year, the summit will be September 30th through October 3rd. We'll cover a variety of tax planning topics as well as practice management and growth topics. And yeah, it got named on Kitsis's list of top up and coming conferences. We've gotten a lot of recognition for it, but I really believe that it's because all of our content is focused on how you can take action. And so people aren't leaving and saying, oh, well, that was nice. I learned some interesting tidbits. They're leaving and putting this stuff into practice. Somebody summed it up in a way that really resonated with me. They said that the summit really stood out to them because it felt like a room full of doers and not a room full of lifetime learners.
I like that. I fall victim to that too. I go to a conference, I'm like, oh, that was interesting. And then I forget it a week later. So to give people actual things they can implement in their practices right when they leave and make it digestible for them, that seems like a great goal for any sort of conference or event.
Yeah, that's how we measure success of the event is what do people leave and put in practice?
Love it. One last question for you. This will be a fun one. What's one tax myth that you wish every advisor and client should stop believing right now?
There's so many that we could go down. The biggest myth that I wish people would stop believing right now is the idea that there isn't something meaningful you can do about your taxes. So many people feel like taxes are something that happens to them, that I may as well ignore it all year and just bite the bullet, pay my taxes in April, and let's just ignore it because I have no control over the outcome. And that's simply not true. Not that I can make your taxes magically go away. I'll joke quite often that I don't look good in orange. I'm not your guy for accounts in the Cayman Islands. But there is, if we're proactive and intentional and we're willing to take the long-term approach, that we can absolutely sand off the rough edges of our lifetime tax bill. And so just embracing that mentality of it is worth spending time on because we can make a difference.
I think another one that I was thinking of, my own financial advisor says this, it's not about what you make, it's about what you keep. And I think it's such an interesting way to look at tax planning because look, you may make a lot of money, but if at the end of the day, your net proceeds after taxes are what they are, like it is what it is. But if there's ways to control and mitigate taxes while still being ethical and legal, et cetera, to me, that's a great rallying cry for any advisor.
Completely agreed.
Love it. Thank you so much, Stephen. This has been really fun. We don't normally talk about taxes on a podcast, but you made it fun, engaging. I learned a lot. And I know anyone listening, whether advisors or industry participants, are going to be able to take some really actionable insights to bring to their practice. So we'll definitely make sure to do this again. I'm sure the tax code will keep changing. There's going to be some hot topic that's worth getting you back on for. But thank you for being so open and honest and really just adding value to our audience.
I appreciate the invite. I like to think of myself as the least boring CPA. So I love being able to have the chance to have these conversations and shed a little bit of light on things.
As a financial advisor, you hold yourself to the highest standards of integrity, honesty, and credibility. You are successful because you take your professional responsibilities seriously and are dedicated to your clients. But are you living your best business life? Are your goals aligned with your firm's, or could a better option exist? Should I Stay or Should I Go is a book written with you in mind. It's a self-guided journey that walks you through the key steps that we take with our advisor clients. This strategic thought process and roadmap to professional self-discovery is designed to help you ask the right questions and think critically and objectively, whether you're considering change or not. Learn how to get your copy at diamond-consultants.com/thebook.